Recyclical, making lithium-ion last forever. Recyclical's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclical Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclical.com or phone us at 778-574-4444. Recyclical, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, hi, Jim. It's Friday here, and it's Friday there, and we've got some listeners, and we've got some questions, and I always enjoy our get-togethers.
We have 3 questions from Michael. Actually, 3 questions for Michael sounds like the name of a religious folk band, doesn't it? 3 questions for Michael. The first question, the U.S. dollar continued to slowly descend this week. Commentators say that the 4-year cycle top is in the U.S. dollar and that it's downhill from here into 2024. Bob, are new highs still ahead for the greenback?
Yeah, that's a good sight and a good observation. Yeah. On the last panic, of course, the U.S. dollar went up. The senior currency always goes up in a post-bubble period, and the DX soared to 114.75, and it became extremely overbought, and we called for a correction, as anybody would. And we had about 105, so it's now somewhat under 103, and it's beginning to get oversold. I don't know how long it'll take to build a base, but I think the best thing here is that it build a base, and then the next rise would, of course, be associated with another discovery of problems in the financial markets. As to the 4-year cycle, I don't follow cycles.
Yes, because his question, next question was about cycles here. I'll read the question and perhaps here we can get an answer here for our friend Michael. Bob, some market cycle commentators see a big market sell-off any minute now with a big decline into the latter half of February, followed by a rally into mid-March, then followed by a final Elliott Wave 3 decline into mid-year. This is a pretty technical question. Others see a higher high in March, followed by a monumental Elliott Wave 3 decline after that. Bob, what are your market indicators telling you about the timing and degree of the next decline? And maybe can you explain what is an Elliott wave for people who don't know?
I don't follow cycles in Elliott waves. I go with overboughts, oversolds, momentum, and pattern. And we looked at Elliott wave decades ago, and it's kind of a loose attempt to find patterns in price series, and I haven't found it reliable.
Elliott Wave 3, that sounds like a new punk band.
Whatever.
Another question for Michael.
We've got a question about the gold miners.
Yes, the gold miners have had a good run, Bob. Is it time to go short the miners in the intermediate term, and can those March 2020 lows be retested?
No, some of the gold stocks we follow, GDXJ, whatnot, are getting overbought. It's been a nice run, but you're in the early stages of a bull market for gold stocks, a bull market that'll probably outperform the S&P. So unless you're a very nimble trader, I wouldn't even kind of lighten up on these things, let alone go short. Deadly to short stocks in the early stages of what could be a lengthy bull market. So, no, if one is antsy, one can take a little off the table because some of the gains have been good. But as I say, emphasize early stages of a bull market for most gold stocks.
Bob, would you agree we're in kind of uncertain times when it comes to the stock market investments and people predicting a recession? Is gold your friend in situations like that?
Well, gold has its role in any portfolio as kind of a ballast protection. But we're, as I said, the reason why we're in the early stages of a bull market for gold stocks is that in a post-bubble contraction, most everything falls relative to gold, like most commodities. And the best way to understand it is that in gold, in any kind of mining, particularly gold mining, costs of energy are about 60%. And price of crude oil is a very good proxy for energy costs. And so it doesn't matter what the price of gold is in U.S. dollars, because if you've got the price of gold going up as U.S. dollars go down, and you got crude oil going up faster than crude, or than bullion, your costs are being impaired. So the point is that we do is we review the costs of mining relative to the bullion cost. And in a post-bubble contraction, which we're early stages, this goes up. And I found the fun way to do it is to take the price of gold and deflate it by the CRB commodity index. And it's acting very well. And if you deflate gold by crude oil price, it's up. Crude has fallen 30% relative to gold. So that implies an equivalent improvement in operating margins. Kind of rough, not all power to gold operations is due to crude, but it's just a proxy for it. So anyways, good question. Thank you very much.
Yeah, I think some Alberta oil mining, that's what I call the rigs, oil mining operations are using natural gas for power because guess what? There's natural gas right there on the site.
Yep.
Yeah, you don't have to worry for anything to be refined. We'll have more with
Good
Bob.
Stuff.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Some of the headlines that caught Bob's eye today, and I'll put these two headlines together. The GOP votes to repeal army of 87,000 IRS agents, and House Republicans vote on bill abolishing the Internal Revenue Service, eliminating income tax.
Oh yeah, isn't that that is fun stuff. Now, when the income tax was introduced, it was temporary because of World War I, and it was like, 1 or 2%, but only on wealthy people's income. But nonetheless, when it came in, it prompted many editorials pointing out that this is unethical to grab someone's earnings before it was even in their hands. And then there's another thing that's scary, and I think it's from a fairly reliable source, is that the U.S. IRS Internal Revenue has something like 4,000 rifles and guns, pistols and whatnot, plus millions of rounds of ammunition. Now, why in the world would the income tax people have such ordnance? I don't know, but anyways, the tide is turning against the IRS and particularly its politicization, because other headlines, Jim, had the the tough dogs at the IRS turning on ordinary folks, with small obligations, whereas usually they were aimed at people who were, on the edge of maybe not quite legal with their tax accounting on much larger accounts. So there was some evil stuff going on with IRS, and it's nice to see some opposition.
Headline: Now is the time for central bankers to make the rich richer and the poor poorer again.
Yeah, that's true. You see, the only thing a central bank can do is to issue currency and credit. And if they don't do that, they're doing nothing. So there's nothing to justify their existence. So they'll always dream up a reason to issue currency and credit. And then eventually a boom will come along that you will get a price rally in commodities and wholesale prices, and then eventually the CPI, and it happens. And here recently as documents the ignorance of the Federal Reserve, because for most of the last decade, the Fed was worried that if they didn't keep inflation at around 2%, something awful would happen, like no inflation or deflation. So they kept the pedal to the metal during the time when a great financial bubble was possible. So they were adding fuel to the fires, and then you had the COVID hysteria where suddenly the world was shut down, so you had shortages. And then because you had this extraordinary promotion of a disease, the central banks went crazy and pumped the money supply even more. So then you do get a run-up in prices, but this is being undone by the fact that the stock market completed a bubble in December, January a year ago, and is in the early stages of a post-bubble contraction. So this will then thwart the chronic urge by central bankers to always issue credit. It'll be a time when the Federal Reserve may not be able to issue credit, so that'll be interesting times.
Now, digging into this headline, time for central bankers to make the rich richer and the poor poorer again, I'm just thinking the rich, they can survive higher mortgage rates. They can survive higher interest rates on loans because they have the money to do so. If you're living day to day, hand to mouth, how can you afford a higher mortgage rate, a higher car loan rate?
You can't.
You can't.
Yeah. Now that's the point, is that the rich have got their in brokerage accounts, and they have their assets, apartment buildings, real estate, and stocks and bonds, and hey, they can make money in that kind of a market so long as things are going up. Whereas a lot of ordinary folks are living on the margin, and you get that rise in the mortgage costs, and it is a killer. And then plus you had the huge rise in gasoline prices, which was also a killer, and also largely government policy to drive gasoline prices up. They really want you to stop using a gasoline-powered car and go to a very expensive, inefficient electric car. But I think the electric car fad is fading. Hey, fad fading. I like that one.
Mm-hmm. Headline, Canada home prices see record drop as high rates hit buyers. That's what we were just talking about.
That's what it is. But mind you, the house prices were going straight up, which was extraordinary. And then all of a sudden it's over. And we think a real estate boom that was associated with the financial bubble, which you have had, previously, like 1929 or 1873, you get followed by a long period of contraction where most prices will be in a long decline. Base metal prices, energy prices. You look at natural gas last summer got up to $10, and then it was recently down into the threes. And it's recovering now and can recover for a few months, but hey, from $10 down to $3, that's a hit.
September last year in Vancouver, we were paying $2.67 a liter. That's $10.68 per Canadian gallon, $10.14 per U.S. gallon. Yeah.
Well, Vancouver is reported to have the highest gasoline prices in North America.
Yeah, because we have an 18-cent transit tax that nobody else in the world has.
Yeah.
Also, Bob, a comment here. The federal government has a target of 500,000 immigrants a year already. Now, I know we need fresh blood out there, young blood, to make sure the economy keeps clicking over so we can pay for the pensions for old fogies like us. But on the other hand, Vancouver, Toronto, we already have a housing crisis. People can't find affordable homes to buy or affordable homes to live in if they're renting.
Canada has had rules and regulations for immigrants coming in, and I welcome immigrants coming in so long as they go through the screening process. But the trouble is the Liberal government, they want to have people in that will be permanent voters for Liberals, so they bring in what they call refugees, and so actually, about 40 years ago, I went to a luncheon meeting downtown, and whoever hosted it, it was quite a deal because maybe it was 100 people, and the speaker was recently retired, high up in the immigration department, so he listed maybe 4 or 5 immigration rules that the Liberals had put in. And then one by one, he pointed out how the Liberals were defying their own laws. And the reason is they were bringing in people they figured would be forever voters for the Liberal Party. And as far as I can see, they're still doing it.
Headline from the Wall Street Journal, rising rates hit landlords who can't afford hedging costs.
Yeah, I guess if you got your portfolio of properties overly leveraged, and you're a bigger guy than the ordinary householder, you're in trouble too. So, and actually this will go right up the scale. There will be some big real estate companies default before this storm is over.
Headline, The Great Unwind. Busiest U.S. container ports went from swamped to eerily quiet. And I can say right here in New Westminster, I overlook a container port. That place used to be packed all the time. Now it can go for several days with not one ship there.
Well, there's in the field reporting, Jim.
Well, I don't know, 47
the headline.
Yeah, 47 years of doing it. Why stop now?
Yes.
Yes. So, but what's the deal here? The ports that were just so busy they didn't know where they were going to put all the containers. Now they're ghost towns.
It's a market. Also, the shipping rates have plunged as well. So it's a global slowdown in industry and commerce and retail and everything else.
Bob, this is one of those the chicken or the egg questions. We're seeing massive layoffs in places like Microsoft, Amazon, other tech companies. The FX exchanges are still going bankrupt. But the thing is, officially, we're not in a recession, but companies are acting like we already are. Are they actually causing the recession by these massive layoffs? Because their profit and loss statements last year were great.
Jim, cause and effect on a recession is very elusive.
Yeah.
You have a boom, everybody gets exposed, there's no new buyers, so it goes down. And this is what's happening now. Now, what is really weird here is quite likely the world is in a recession, and the U.S. is almost in a recession. And the reason why I say that is that the U.S. yield curve, which is the difference between long rates and short rates, has become inverted. And we've got the charts on the yield curve back to 1857. And the rule is every inversion of the curve has been followed by a recession without fail. There's one more rule on this one, Jim, is that if the thrust to inversion is dynamic, or the more dynamic it is, the more serious the contraction will be. And this, the inversion has been intense. So we got two things. There will be a recession. Two, it'll be severe. And, but employment numbers, which I always try to avoid, have been very firm. And I think that is due to people trying to get back to a normal life after the COVID shutdown. Mm-hmm. I can't think of any other explanation, but at some point, even the employment numbers will turn towards adversity.
Now, these layoffs in the high-tech centers, I think will have more of an impact on the economy because those job numbers don't tell you what kind of jobs they are.
Yeah.
High-tech, $100,000 plus, pretty typical. But are the jobs being created, serving staff, burger flippers, people like that?
No, that's always there, but you take and have a whole lot of people in the San Francisco area unemployed, their tax revenues decline, and let's face it, the city of San Francisco is very poorly managed anyway, so, let's put it this way. The actual numbers confirming a U.S. recession are not there yet, but you had, like industrial production figures, the sharpest drop in about 15 years or something like that. So, there are one or two items that are saying that are no longer boom stuff. So we'll just be patient waiting for the actual numbers to confirm that the recession is on.
I really would like to see the statistics people do more research. What kind of jobs are being created? What kinds of jobs are being lost? And what's that impact on the economy? Because believe me, somebody making 150 G's is pumping a whole lot more into the economy than someone making minimum wage. Yeah. Bob, always a pleasure chatting with you.
Yeah, Jim, good to be with you. And we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He was speaking to us from Vancouver. If you have any questions for Bob or any of our guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.